Welcome to the Money GPS. You came here for the truth, so let me unveil that for you. Today, we are going to talk about first this historic shock that has already begun. Of course, that relates to inflation, and I'll show you what the governor of the Bank of England had to say. The next thing that we got to talk about is the bond market tell. What is it signaling right now and what's been happening within it? And if I have time, I've got about 75 different things to show you. I'm going to get into all of that and more. Let's go. Here we have BlackRock president saying, quote, entitled generation now learning about shortages. Think about that for a second here. I know BlackRock, like this with the Federal Reserve and of course with the government, we know this is a fact, but he does make an interesting point, okay? For the first time, this generation is going to go into a store and not be able to get what they want. And we have a very entitled generation that has never had to sacrifice. The economy is reckoning with what he dubbed scarcity inflation, or the fallouts from a shortage of workers, agricultural supplies and housing, and of oil in some regions. I would put your seatbelts on because this is something we haven't seen. This is huge, not just because it's coming from this individual in particular, but it is of note. We should be paying attention, and you and I have been. We've been obviously covering the material here, and I've seen your comments, and I am paying close attention as well. We have to pay attention to each other. This works both ways. Now, I'm looking around the world and I'm seeing the same patterns popping up all over the place. People are telling me, I go into the store, I can't get this product or I can't get that product. I want this thing, but I can't get that, and so I have to choose this. Does that mean that the store shelves are completely empty and there's no food left and people are fighting each other and ripping their hair out? No, no. But what it does mean is that we've already begun on this path. It doesn't happen necessarily overnight. This isn't Hurricane Katrina. This is what you have when all of this, the information and all the data that's come before it occurs. Here we are today. That's all. We're just documenting the process as it goes along. But if you're in Germany, my friends in Germany, check this out. Germans told to wear a sweater to cope with soaring energy prices. That's right. You might be cold at night. You might not be able to afford, the heating and all of that, while your government likely printed billions or trillions of dollars, either through some sort of central bank interaction, or maybe it's coming from the fiscal side, the government side, in some sort of stimulus program. But you've got to wear a sweater because it's real cold. By the way, I'm wearing a sweater, but the whole point here is that you shouldn't have to do this when they're printing up trillions of dollars. On the last walk and talk that I did, only a few people watched that video, a handful of people. I talked about this very thing. They printed trillions of dollars, and then they're telling you that you can't even eat what you want. Now, I get it. We should be smart about our money, and we should save, and we should invest, and we should do the things that we need to, and be prudent and be wise in this. But this is a basic thing. Your home, where you live, the bed you got to sleep in, the food. These are simple things. And the crazy effects that we have today of inflation are affecting everyone. 1 in 5 workers runs out of money before payday, according to this survey. I think it's probably more, but you have heard about this all the time. Okay, all the time. People, they get to that end of the week or end of the 2 weeks or the month or whatever it is, and they just do not have enough cash. And you see that there are certain spending trends that tend to happen, certain times when people generally get paid. It shows you that people are dealing with hard times. Now, there could be multiple issues there, but let's just cover this point. Huge. Britons face a historic shock to their incomes, according to the Bank of England governor. Andrew Bailey says Russian invasion of Ukraine will exacerbate UK cost of living crisis. They'll point the finger in any direction, doesn't really matter. Maybe they should have read that paper that was done by the San Francisco Fed that I showed you in yesterday's video, which I'll link to at the end of this one, that said, oh, by the way, inflation is actually being caused in part by the stimulus programs of the government. But anyway, of course, all of these things affect it. Everything. The quantitative easing, despite some people will disagree with me on that. The stimulus programs, if there's a war going on, I mean, there's 100 different things it could be, and each one has its own impact, own level of impact. Okay? Stagflation, something that we've talked about all the time. Imagine this, your wages are going up. Oh, I'm getting a raise. This is fantastic. Yes, but if we see in the total, in the aggregate, that inflation is rising higher than most people's raises. So overall, people are not doing better when you factor everything in. And this just shows you time and time again how they eat away with inflation. They're eating away from the bottom or from the top, however you want to look at it. And they're basically kicking you down from the top. And this happens all the time, right? Every cycle is like this. Okay? This is really an historic shock to real incomes. The shock from energy prices this year will be larger than any single year in the 1970s. The caveat is that in 1970s had a succession of years that we very much hope would not be the case now. But as a single year, this is a very, very big shock. Unbelievable. On top of that, Shanghai expands the lockdowns as new daily cases surge by a third. We need to see what's happening here, Shanghai being one of those very important cities and a telltale sign for what could happen around China, and then does that occur around the rest of the world? Germany and Austria plan for gas rationing over payment standoff with Russia. The good news here is that this is not on individuals, at least yet. But of course, as they say here, gas rationing right here. Looking at this, I just had that right here. Giving preferential treatment to households. Going to cut off parts of industry. That's not good either. Like, think about that for a second. Okay, obviously, households, most important factor. But if you cut off the industry, doesn't that create inflation? Okay, then what do? Well, people are dealing with higher inflation. Send them a stimulus check. What does that do? Increase inflation. I mean, I understand catch-22, whatever. But it's important just to see it all and the way this is happening. But most people, they don't have the attention span. Look, I'm about 9 minutes in or so far. What am I? 8.5? Most people are gone already because they don't have the ability to foresee what happens, tomorrow. They don't even know what happened after lunchtime. But those of you who are actually paying attention are seeing all this. You already know what's happening here. And I'm just keeping you up to date. That's all. Brand loyalty takes a hit from inflation and shortages. Food shoppers try new grocery products. Quote, we are seeing people making more choices on items. They have to go with the generic store brand. I've seen it not only in the articles like this out of Wall Street Journal, but I've seen it in the comments below. Wait a second, have you given your thumbs up yet? Really key, really important to do that to support the channel. Okay, I appreciate that. Now let's look at this real quick. I want to show you what's going on in the financial world, the markets. That directly connects in with what we are seeing today. Of course, looking at the shortages, looking at the inflation, it's all over the place. But what does it mean, for the pension funds and for mutual funds and stocks and so on? The 11% surge in US stocks in the past 2 weeks has the hallmarks of a bear market rally that might give way to deeper losses. This is according to Bank of America, who, among all the big banks, tends to be the most bearish. But essentially just saying we've got clearly weaker fundamentals, looking especially at the yield curve inversion that is taking place, that is extremely important when we look at indicators. And that's one of the things that they mentioned here. The worsening macro backdrop and market unfriendly Fed make sustained US equity gains unlikely. If you look at it historically, April tends to be a very good month for the seasonality. Then we get into May through October, September, October timeframe, usually not as good. And then, of course, we move into the end of the year and you get that Santa Claus rally. It's really from Halloween onto the end of the year, which looks much more attractive. That's the seasonality of this. You got buybacks coming in here, which I think I have loaded up for you in this case here, which there is a blackout period at this time, but in general, you got a lot of corporate buybacks happening. I believe about $1 trillion worth this year they're expecting. Looking though at this, we can see that there is the Federal Reserve removing that support and at least the rhetoric. Like that's key too, right? The forward guidance, the rhetoric. What are they saying? And they're saying they are pulling out. So we will see what happens as a result. Global bonds have never seen such a deep, sustained loss. Looking at this chart goes back to the 90s up until the present. What could that mean? Is this the time to get into bonds? Is this the time that we see a big change? Only time will tell. Tantrum during taper. Central bank easing reduced just as bonds are starting to tank. G3 central bank balance sheets, and that's the black line, and the global government bond index. So that has been tanking. It's been a little while. Could this be a turnaround? I don't know. Usually when everybody's going in one direction, doesn't it often happen that it goes the other way? We'll see. I'll give you that. This right here, big stock sales are supposed to be a secret. The numbers indicate they aren't. Share prices fall ahead of 58% of large sales. Regulators are investigating. Oh, yeah. I'm sure. Oh, yeah. Oh, yeah. Well, they'll investigate. They'll investigate high-fiving, take me out for lobster and steak. I'll investigate you. Sure, that'll happen. The SEC is all over it, my friends. Have no fear. Anyway, I don't want to go into the depths of this, but basically what we're seeing here is that covering 393 block trades between 2018 and 2021, 58% of the time, the share price declined in the trading session immediately beforehand, controlling for the performance of peer companies. Of the 268 trades for which they were able to determine how much the banks were paid, the sellers would have received $382 million more if the stock had performed in line with the benchmark, or $1.4 million per trade. Okay, they go on. Okay, isn't it interesting what happens? They specifically mention Morgan Stanley in here. All I want to highlight here is that we know there's corruption. It's deep. They get into the investigation. I just think it's interesting to see all this stuff. Okay, and then we have this China-Russia relations continue to be like this. According Lavrov said the world was, quote, living through a very serious stage in the history of international relations. We, together with you and with our sympathizers, will move towards a multipolar, just, democratic world order. Now, by saying that, I probably have that Wikipedia link at the bottom of this video, but what can I do? That's the reality. So I want to thank you for all of your time today, for watching this video. Don't forget to give that thumbs up. This is so important. All this stuff is just daily coming at me. I'm trying to bring this as quickly and concisely as I can each and every day. If you're not already, hit that subscribe button. I do appreciate that very much. I'll see you on the next one. Take care.